Hi guys, welcome to our Bosley Real Estate Ventures YouTube channel. I'm very excited to introduce our next guest for today. I've known Nic Martin for over a decade now. He's extremely professional, very hardworking, and always gets us the best results possible for the purchases that we do for our projects. Nic is our exclusive realtor. Welcome, Nic. Please tell us a little bit about yourself.
Thank you, Brendan. I appreciate the introduction there. So yeah, my name's Nic. I'm a realtor with Bosley Real Estate. I've been in the business for about half a decade, and I've been a real estate investor for about a decade now. And it's been great working with you. And basically what I specialize in is multi-residential real estate, but I also do a fair amount of residential real estate as well. So, you know, condos, whether that's investment or end user. Freehold, same thing, could be, you know, single family or duplex, triplex, whatever it may be, but that's kind of my story.
Great. So Nic, the questions that we're going to be discussing today is just mainly based around the pandemic, okay? There'll just be a few questions. The first question is, how do you describe the housing market currently during the pandemic?
Mm-hmm. You know what, it's a really interesting market right now. And I think it's been pretty surprising for, you know, myself and a lot of my colleagues is that, you know, we haven't seen prices dip the way I think people may have expected or may be expecting. And they seem to be holding fairly steady. So what's happened is inventory has dropped significantly. So we're over, you know, 50% less listings than we saw at a similar time last year. And so because there's less inventory, prices really haven't moved a whole lot. You know, it's not
1 or 2%.
Pardon me?
Maybe 1 or 2% max, right? That they've dropped, maybe.
Yeah, and again, it depends on the market, and there's obviously sub-markets within Toronto, a city this big. But you know, I do a lot of business kind of in the downtown core, and I can tell you that, you know, prices have maybe dipped 2 to 3% or so. And you know, certainly things were, and I should qualify this, that's from say February of this year. So not year over year. They're up a little bit more year over year. But from February, where the market was really moving, it was certainly a seller's market, and then things just stopped during the pandemic. It was just kind of radio silence. There weren't a whole lot of people listing. There weren't a whole lot of people buying. Everyone was just kind of waiting to see what happens. And I think we're starting to get a sense of, you know, where things are going to land. And it seems like, you know, the demand is still there and prices are kind of holding fairly firm.
Mm-hmm. Right. Yeah, and I agree. I'm kind of seeing the same numbers to date. So, you know, we both own our homes. We're real estate investors. Across the three sectors, freehold, condo, and multi-res, how do you see any effect or change across these three sectors? Because they're all different, right?
Sure. I mean, starting with condos, I think, you know, there was an increase in listings initially during the pandemic. And I think that was a lot of Airbnb inventory that was hitting the market. So, you know, as the Airbnb market kind of dried up, I think people started listing condos. So in some Airbnb friendly buildings, I started to see a real buildup of listings, and that caused some prices to dip somewhat. But generally speaking, across the board, I think prices have remained fairly firm. You know, I expect going into July, things might increase a little bit, and then they may kind of stay flat for, you say, the rest of the year or whatnot. But again, I don't have a crystal ball. It is kind of tough to predict exactly what's going to happen. You know, as far as the freehold sector, I mean, detached, semi-detached, particularly the semi-detached market still is remaining really, you know, pretty hot. It's still a seller's market. And then as far as detached is concerned, you know, there have been increases year over year. I think it's really just a matter of those increases maybe not being as significant, obviously, as they would have without the pandemic and all of the issues that kind of arose there. Yeah. As far as multi-residential, I mean, this is interesting because oftentimes during recessions or during, you know, periods where, say, residential real estate is maybe taking a bit of a hit. Oftentimes, multi-res does fairly well because, you know, it provides a bit of a safe haven in the sense that it provides cash flow to the owner. And so I think multi-res generally seems to do fairly well during any type of recessionary period. And there was a lot of concern about people not paying rent at the beginning of the pandemic. But from the owners I've spoken to, from the other realtors I've spoken to, it doesn't seem like that's turned out to be as big of an issue as perhaps it was made out to be in the media or that type of thing. For the most part, I know of a few owners that have maybe, you know, renegotiated a lease slightly, maybe given a $50 or $100 a month, you know, break to some tenants. But generally speaking, you know, most of the owners I know, most of the realtors I've spoken to have all said that rents are coming in. And so it seems like multi-res is going to continue to be again, somewhat of a safe haven for people during times like this.
Yeah, for sure. I mean, that's what we've been seeing across our buildings. Tenants are still paying rent, and there's not much default going on there. So yeah, it is good to see. I really do agree with you. The multi-res asset class is the strongest and holds the most firm through any pandemic or recession or downturn in the market. So yeah, multi-res is a great asset class to be invested in, for sure. So, you know, I know you don't have a crystal ball, but what are you willing to share your insights for the next 3 to 6 months as to how you see the market performing across all the sectors?
Sure. So I feel that there's a significant amount of pent-up demand. So there's buyers out there who weren't feeling comfortable about going on showings or purchasing a house only, you know, with some type of virtual showing or whatnot, you know, virtual tour. It's not quite the same as actually going into the house, obviously, and seeing things and whatnot. And I feel like we're just starting to get back to the point where buyers are feeling more comfortable to actually go and visit listings. And so I think that there's a fair amount of pent-up demand as we kind of move into June, later June, July. I think we're going to see some more listings hit the market. I think we're going to see buyers start to return to the market. And I do think that prices are going to move up slightly from where they were in May. And then over the next 3 to 6 months, I think they hold fairly steady. So I don't think there's going to be any crazy run up in, you know, over the course of the summer or into the fall. I think things stay fairly steady.
Yep. Yeah, that's interesting. Just, you did mention that you see that there's potentially a brief spike in the month of July. What would you attribute that to?
Again, I go back to pent-up demand. And I just think that there's a lot of buyers on the sidelines, a lot of sellers on the sidelines. I mean, I can tell you that I've got a couple listings coming up in July, and I've spoken to those clients. We were chatting back in May, and my advice to them was to hold off if they can, because, you know, we obviously want to list at a time when people feel comfortable to actually come and visit the house, you know, have a good look, walk through it, you know, be able to bring a family member through. Or family members, you know, and as of right now, that's not the situation that people have been able to kind of buy and sell with. So that's kind of where I think that the pent-up demand is based from. And I should add that when I say this, when I give this prediction, obviously, like you said, I don't have a crystal ball, but I am talking about Toronto. So I'm not necessarily talking about some of the other markets that may be affected more or whatnot from the pandemic.
Yeah, got it. So just to finish off, what would the top tips be that you would give to 2 types of buyers? One is just a freehold, a buyer that has a family and just looking to move into a family home. And then secondly, an investor looking to buy some form of, whether it's a triplex or a 10-plex or 14-plex, whatever it might be.
Sure. Yeah, so I mean, for the average buyer, let's say, you know, somebody who's maybe moving up from a condo or wants to buy their first home, I think the best piece of advice I can give is really speak to your realtor about pricing, because that can be the most complicated and potentially frustrating thing for a buyer is that oftentimes the price you see something listed at is not the price that it's going to sell for. And so again, it's really common, especially, prior to the pandemic, but it is coming back more to see product listed well below the actual price where it's likely going to sell. Then there's some type of an offer date, a holdback on offer, and it's going to sell for 10, 15, 20% more than what it's actually listed for. And I think if you can work with your realtor to really get a sense of the market, the sub-market that you're looking to buy in, and then the pricing for this particular product type, I think that's the best piece of advice I can give, so that you don't have that disappointment when you think something's going to sell for $1 million and it sells for $1.2 million or whatnot.
Right, makes sense. That's about all that we have time for. Nic, thank you so much for your time. I really do appreciate it. Always, all your advice, expertise, and insights is invaluable, and I always take away a lot from them. So thank you very much, and we'll be in touch.
Absolutely, my pleasure, Brendan. Looking forward to it.
Right, thank you. This is Brendan signing off for Riley Real Estate Ventures. See you later. Remember, dream, believe, create, succeed. Bye for now.